Bitcoin fell by 5.77% yesterday, and today has rallied up by 4% at the point of recording today's video. I'm going to be reviewing the price action of Bitcoin on the short and medium time frames. We'll be taking a look at where Bitcoin's price currently is heading and what it might mean for the future of BTC. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, and let's jump right down into it. Let's kick things off by taking a look here on the daily timeframes. As I said, we've seen yesterday's position by 5.77% down, but we have, of course, seen a bit of a run today. It did actually fall a little bit lower than close yesterday, coming down an additional 1.82%, but it has rallied up here to a local high of 59,990 on this USDT pairing on the Binance timeframe. Well, the Binance chart, I should say. Now, we've rallied up 4.07% today so far, and we are resting at the point of recording at $59,730. This is basically fighting the 200-day EMA. That is the white line that is coming through the chart here. That's currently sat at $59,462. So we know that this is a key area. If Bitcoin can get a closed position above the 200-day EMA, it might be on track for another attempt at pushing higher than the 50-day SMA, the yellow line coming through the chart, currently sat at $61,769. The blue line coming through is the 50 EMA, so also an area of resistance that we saw on the 8th of August. That's currently sat at $62,403. So if we get a good close today, we might be on track for a run towards that $62,000 threshold. Now, there is a structure here that is still very much valid. This structure is a 5-wave pattern on the daily time frame. We can see here that we do have a valid structure for BTC to continue its run to the upside. However, we should note that there is a very high unlikelihood because of the wave 4 here coming down quite deep. Now, technically, it's still possible, so we still should hold hope that we can have this run to the upside, where we target out $64,000 to $66,000. Anything going down lower, though, than the previous wave 1 high, which I'm going to mark up on the chart right here for you guys at $57,040, is going to basically create an invalidation of this structure. We got very, very close to it, but we didn't quite get there. Sorry, the actual swing high, sorry, my bad. The swing high is 57,736. It's this wick just up here with our wave 2 coming down here. Okay, so knowing that we have this close to invalidation, but not quite there, anything coming down lower than $57,736 is going to create that invalidation. Okay, so we have the ability to see a potential $64,000 to $66,000. Anything going down lower than $57,700 is basically going to say no, that's not going to happen. Okay, so Elliott wave theory is a very interesting structure right now. There's multiple different ways of reading it as well, but for the most part, that's the area of interest. Now, on this, one of the things that's worth noting, after our collapse from the high of the 29th of July to the 5th of August, this particular area is right there on the 786. Now, we have already retraced up to and got rejected on the 702 and the 0.618. So Bitcoin is already finding that the 50 EMA, the 50 SMA, the 0.618 fib, the 786 fib, the 702, these are areas of major resistance for BTC's price action. So we know that there's going to be a bit of a hurdle, a bit of a challenge for Bitcoin to continue its run to the upside, but it's something that we have to kind of keep an eye on. Obviously, we can see that there's potential incoming crash for BTC should we not be able to hold these areas. And that particular move to the downside would be, well, quite disastrous for BTC. So as long as we stay above 57,736 and we finish off this structure here between 64 and 66,000, that essentially is going to allow us to look at this through the lens of an A, B, C structure where we look to set a higher high on the daily time frame. Doing that is going to basically mean that we're not going to see that incoming crash in the market. If we do, however, break down lower than that 57,700, then our ABC is actually in the opposite direction, A, B, C. And I'm going to pull this down to here where we had that rejection on the 50 EMA, in which case we lose 49,000, the swing low on the 5th of August, and we come down a little bit deeper, more towards kind of $45,000. Okay, now we can be more scientific about it by measuring the distance of this entire structure, putting it on our rejection here on the 8th of August, of which that high was $62,745. So I'm going to try and go ahead and put that right on there. That means that we have the ability to see this little golden pocket right down here between 40,320 and 43,872, that being where we finish our structure. Okay, so we want to be very mindful over everything that's going on here. Now, I've been through this dozens of times. I am still bullish on BTC, but we have to respect the fact that there might be some volatility to be expected before we get into those bullish markets. Not everything that I talk about in these videos is going to happen instantaneously. We're not talking about everything kind of moving up within 1 or 2 weeks. We're talking about timeframes here where things are going to take, weeks to months to play on out. It's important that we understand those differences and those distinctions. So here on the daily time frame, with the idea that we might see a breakup, and if we do get a new higher high on the daily time frame, then we can kind of put this to bed. But until then, we have this incoming kind of crash to the downside, where we can see here a huge pocket of liquidity also sat at this lower range in that kind of previous area of buying. Let me show you and highlight that. Just on here, this previous crash that we had, basically between 35,555 to 48,969, is an area where you can see some immense amount of pressure, okay, in terms of price. Now, we can be a little bit more refined about that by taking a look at this previous area of consolidation just over here. This is more of a median kind of average. As you can kind of see, this is where price was consolidating for quite some time before it broke on out. And this happens to also coincide with that 1 to the 1.236 Fibonacci sequencing, and right down here in the C wave targeted range. So again, 40,295 approximately to 43,800 approximate. This whole entire range right down here is an interesting pocket, in the same way that we were talking about the $49,000 also being a really interesting pocket as well. That particular area was previous resistance, turned into support, also currently support. If we lose that as support, then this is the next area where we find support, basically 40,200 approximately, right? So this is what we're looking at here for BTC. It doesn't distract from the idea that Bitcoin isn't bullish, because it is still bullish even on this kind of corrective action. I also want to note that this potential move to the downside to that area is about 45% from that swing high, an all-time high of 73,777. Okay, that's really much, or very much, I should say, in line with the expectations of a Federal Reserve pivot. Now, obviously, this is happening before the pivot rather than after the pivot, but I do believe that this is the market pricing it in. We've already seen the European Bank do a pivot. We've seen the Bank of England do a pivot. So we just see the Fed are a little bit behind the rest of the market, or the rest of the countries kind of already reducing their interest rates. This is because the Federal Reserve didn't do what the other central banks did. They did not have an aggressive attack against inflation. We saw the ECB do 0.5s. We saw the Bank of England go 0.5, but the Federal Reserve stayed static at 0.25. And as a result, they kind of made the situation a little bit worse, and they've dragged it out for a very long time as a consequence. So we will see a pivot from the Fed, and that is going to basically be what we see here being priced in. So the market is pricing in the idea of a Federal Reserve pivot. Okay, and that's why I think we have to come back down into this lower range at around $40,000 to $42,000. I think this is going to be the area where we find maximum pain in the market, where we actually find the Federal Reserve pivoted, they reduced their interest rates, and then everything kind of gets taken off from there. But I do think it's going to take a while. I don't think we're going to, I think the crash will be quick, but I don't think we're going to reverse straight out of here very quickly. I think it's going to take some time for the money printer to turn on and for liquidity to start rolling back into the market. But when it comes to Bitcoin's price action, yeah, this is how it's looking at the moment. The only things that's going to change my mind is if we can get a new higher high on the daily time frame, which I'm hopeful for, because I don't mind the bullish break to the upside ahead of any potential Federal Reserve pivot. But guys, you can let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? What is your price prediction for the medium time frame? Do you think we're going to see a $40,000 Bitcoin, or do you think we're just going to be rallying up into new all-time highs from here? Let me know in the comments down below. Or better still, join us in our free Discord server. We'd love to have the conversation down there as well. If you found this useful, smash the like button. If you're new, subscribe. And if you haven't done so already, check out my second channel just here, where I talk about a lot more technical analysis on a day-by-day basis.